Frankfurt, Reuters. Deutsche Bank on Friday posted its third consecutive annual loss in 2017, taking a hit from challenging markets, a drop in investment bank revenue and a U.S. tax reform, after a difficult fourth quarter. The worse-than-expected results are likely to increase pressure on Chief Executive John Cryan to turn Germania Euro trademark's biggest bank around. We believe we are firmly on the path to producing growth and higher returns with sustained discipline on costs and risks, Euro Chief Executive John Cryan said in a statement. We have made progress, but we are not yet satisfied with our results. Investors have called on Cryan to cut costs, but the bank said it anticipated costs in 2018 of €23 billion, higher than a previously targeted €22 billion. Last March, Deutsche announced an overhaul that includes the integration of its post-bank retail bank unit with its own in-house Deutsche Bank branded consumer bank, as well as the partial sale of its asset management unit. On Friday it said the integration with Postbank was in schedule and that it would partially float its asset management unit in the earliest available window. Still, the Bank trademark's executives have warned that a recovery would be a long, hard slog that would take years, not quarters. Continued weak performance at the bank has prompted some investors to question whether Cryan should be given more time to turn around the bank, after less than 3 years as CEO. It reported a 2017 loss of €497 million, $621 million, worse than the loss of $290 million forecast by 9 banks and brokerages polled by Reuters. U.S. tax reforms prompted a non-cash tax charge of €1.4 billion, pushing the bank into a full-year loss. In the fourth quarter, its net loss widened to €2.19 billion from €1.89 billion a year earlier, and revenue slumped 19% to €5.7 billion. Analysts had forecast a loss of €1.95 billion on revenue of €6.2 billion. Its cash cow bond trading division saw revenue tumble 29% due to lower client activity in less volatile markets. Competitors saw similar declines. The Bank trademark's shares opened down 4.8% on Friday. During his tenure, Cryan has stabilized the bank, raised capital, designed an overhaul, confronted legal challenges and managed the demands of greater regulation. But shareholders are now airing their impatience. Hendrik Laber, a fund manager with Acadis, said he liked Cryan personally. But I don't trademark know which direction Deutsche Bank is heading toward he said. With UBS, the direction was clear with its big restructuring Laber said. I'm not seeing a clear strategy with Deutsche Bank Recently, the bank has been the focus of national debate over its intention to resume bonuses despite its full-year loss. Earlier this week, government spokesman Stefan Siebert told reporters, a company management must of course ask what impression it leaves in public. Compensation at the investment bank rose 45% in the fourth quarter to €1.29 billion. Deutsche Bank has become a major player on Wall Street over the past 2 decades, but misguided bets and poor conduct have resulted in a litigation bill of €15 billion, $17.6 billion, since 2009. Legal battles have ranged from its role in the marketing of U.S. mortgage-backed securities to a so-called emir trading euro scheme that could be used for money laundering. Last year, a looming $14 billion fine from the U.S. Department of Justice had unsettled clients and investors and prompted talk of a government bailout. On Thursday, the U.S. Commodity Futures Trading Commission said it issued an order settling charges against Deutsche Bank Securities Inc., a unit of the bank, for attempted manipulation of the ISDAFX benchmark and requiring the firm to pay a $70 million civil penalty.